Hello, good afternoon, and welcome to JHSF Participações Webcast to discuss Q1 of 2022 earnings results. With us today are Thiago Alonso de Oliveira, CEO and CFO, and myself, Mara Boaventura Dias, IR Director. Please note that the presentation will be recorded and that all participants will be on listen-only mode. We will have the great presence of Alan, our sign language interpreter, in order to increase accessibility in our communications. This event is being broadcast simultaneously via YouTube through JHSF Participações website and via webcast where the presentation is available for download through JHSF's investor relations website at ri.jhsf.com.br. Please pose your question via webcast by clicking on Ask the Speaker. Before proceeding, we would like to clarify that forward-looking statements made during this conference call regarding JHSF's business prospects, projections, and operating and financial targets are based and the beliefs and assumptions of the company's management, as well as on information currently available. They involve risks and uncertainties because they refer to future events and therefore depend on circumstances that may or may not occur. Changes in macroeconomic policy or legislation and other operational factors could affect JHSF's future performance and lead to results that differ materially from those expressed in such forward-looking statements. Now I would like to hand it over. Oh, I would go to slide 3. And on slide 3, we have highlights on the Q1, and all the variations are are the comparison of to Q1 of 21, like gross revenue, an increase of 20%, almost 500 million reais, a gross profit almost 300 million reais with an increase of 3.5% vis-a-vis Q1 last year. Adjusted EBITDA increasing 7%, reaching 258 million. Now, on the operational side, our sales continue at a good pace. That would be real estate development sales, 321.6 million. Shopping malls, we exceeded the period of 2019. We will see the figures in the presentation, but here we have figures regarding 21. Here we have great sales, 28%. Now the SSR, which is 91.4% above the same quarter last year. Hospitality and gastronomy, we are above the pre-pandemic level in 2019. And here we can see the variations vis-a-vis Q1 last year. And here we're highlighting daily average in hospitality, which is 42% above the average. Also, average cover gastronomy, 28.2%, and airport movements. Well, we have grown in movement 38%, especially with the resumption of international flights. We've seen this increasing, and the leaders filled will go to 291.5%. And the last highlight, on Q1, we paid 108.9 million. This is dividend payment. And with this, I close the highlights and I will give the floor to Thiago that will embark in details in each one of the segments. Thiago, you have the floor. Mara, thank you very much. And it's a pleasure to be with all the participants that are following this webcast. Thank you for your attention and giving your time today. We will start talking about the real estate development. Mara already gave you some color regarding this point, and I would like to draw your attention to the growth vis-a-vis Q1 of 2019 and 2020 and the stability regarding Q1 of 2021. What I would like to highlight is the chart in the middle where we demonstrate a change between this year and last year in the distribution between land land plots or real estate products as we call them. This is important to highlight because this is connected on the change of the behavior of the gross margin that we generate, where we sell more land plots where gross margins are higher vis-a-vis a scenario where we sell real estate products at a greater proportion as we saw this quarter. This for us is very normal. Our margins are sound, amongst companies that reported their results, our figures are two or three times higher in terms of percentage margins in comparison to the home builder industry. But during these calls with you, we have the opportunity to highlight more specific matters of each one of our businesses. And during this quarter, we wanted to highlight that this variation of the makeup of the mix between lot plots and real estate product affects percentage margin and also has a characteristic that is very specific of the home builders industry, that is the percentage of completion, the POC. So just to share with you a message that things are happening within our expectations in terms of margin and even revenue recognition. This being said, I will talk about our gross revenue. It is practically stable. It increased 2.1% vis-a-vis last year. Now, in comparison to 2020, 283% of growth and 639% of growth vis-a-vis 2019. And this shows you how the company has grown in terms of size in this activity. And our adjusted EBITDA, there was a variation of 12%. This variation, as I explained when I was talking about the distribution between land plots and real estate product, well, all of this is within what we expected regarding margin variations. Now let's go to our next slide, slide number 5. Now we will talk about malls, retail, and digital. By and large, what we observed was when we compare quarter on quarter, practically 87% of growth, which is a very significant figure. We want to highlight that Q1 of 2021, well, we were still feeling the effects of closed stores and malls because of the restrictions of COVID. But when we compare it with 2020 and 2019, the growth is of 57% vis-a-vis 20 or 49% vis-a-vis 2019, which demonstrates that in this 3-year accrual, where we try to disconsider or the comparisons in moments where the malls were impacted by the pandemic. Well, the malls have grown in a very strong fashion. And if we highlight the high income malls, Catarina Fashion Outlet or Shopping Cidade Jardim, the growth of sales vis-a-vis last year was 64% in Cidade Jardim and also higher and 101% in Catarina Fashion Outlet. There are expansions in both malls. Cidade Jardim is concluding its expansion and will be opened in brief, and Catarina Fashion Outlet will finish by the end of the year. Now, operational indicators, the SSS, same store sale, SAS, SSR, SAR, all of them present significant growth vis-a-vis 2020, 21, and 2019. Now, what we want to share is that we have a sound business. We're generating cash flow and highly attractive, not only regarding our relationship with customers, but also business partners that would be store owners. Now, gross revenue, well, 80% of growth and gross revenue, and EBITDA 404% of growth in EBITDA year on year, which demonstrates the sound environment of our business. And we measure the soundness due to the occupancy rate. We have 97.3% of occupancy, and occupancy cost totally competitive, one of the lowest of the industry, which is 10.3%. Our retail operation and our digital operation year on year, almost 80% of growth. So for this area, well, they delivered excellent results. Now, hospitality and gastronomy, Mara mentioned that the average daily, we had a growth of 42% in terms of the comparison against 2021. When we analyze 2020 and 2019, that is on the upper right-hand side, we see 64% of growth vis-a-vis 2019 and 54.4% vis-a-vis 2020. Despite a higher inflation scenario, we've delivered a revenue growth which is above inflation. So RevPAR, that is our revenue per available apartment, increased 87% year on year, and excellent growth regarding 2020 and 2019 in terms of gross revenue. Hospitality and gastronomy increased 66%. On the lower part, we can follow up the operating indicators of the restaurant. There has been significant growth year on year, 46%, basically 22 and 21 and 2020 and 16, 2019. That shows that throughout the pandemic, we were able to attract more customers to our restaurants. The average cover year on year, an increase of 28%, 40% 2020, and 33% vis-a-vis 2019. And when we talk about the adjusted EBITDA of this area, this quarter, the result is 70 times what we achieved on Q1 of last year, uh, almost 1,700% vis-a-vis 2020 and almost 300% vis-a-vis 2019. This shows in a certain way how we were able to navigate through a very troublesome period, both in hospitality and in gastronomy. And here we can see a sound business. Now talking about our airport, when we compare this year on year, we've practically doubled the size of our operation, 111% of growth. Here you can see the base of Q1 of 2020. We would like to remind you that this was the first full quarter where we operated. Now we're 7 times bigger than that operation. Now this growth is correlated to new hangars that were built throughout this period. We had only 2 hangars in 2020. and 2021. We had 25 hangars, and now in 2022 we have 8 hangars, and at the end of the year we expect 12 hangars in the airport. Now, regarding our adjusted EBITDA, we increased 160% vis-a-vis Q1 of last year, or 261% vis-a-vis Q1 of 2020. Now, in terms of operations during Q1 of 2022, 40% more operations than that we had on Q1 last year, and 3 times more liters filled regarding in comparison to the same period last year. Now, in terms of expansion, the hangars that I mentioned, the 5 that we that we opened last year, and the 8 that are in operation. This was extra 10,000 square meters in hangars, and now we're close to 28,000 square meters of hangars of area, and this is the biggest international executive airport. Now, consolidated results: 20% of gross of adjusted EBITDA. If we see 2020 a growth of 175, or vis-a-vis 2019, 275%. The message of the growth of the company as a whole during the period of the pandemic. Well, we can note this in terms of gross results. Year on year, we increased 3.5%, but when we see and vis-a-vis 2020, 288, and vis-a-vis 2019, 497%. And in the adjusted EBITDA, we see the same thing. Although there was a slight drop in our net revenue during this revenue, and it's because the mark to market of part of a cash flow that we maintain in dollars. And reminding you that Q1 of 2022, the BRL appreciated vis-a-vis the dollar. That is where different from what we're seeing on Q2, that dollar is appreciating vis-a-vis the BRL. So this is why there has been a change on Q2 of 2022 regarding net results. Now, here briefly, we can see our cash position and indebtedness. Our company has been very diligent, and we've maintained a low level of net debt. Our cash position high. Now, liquidity and accounts receivable, which is a result of sales of performed real estate, and this reassures us to invest in the future, and also we feel reassured regarding our financial leverage position. So with this, now I would like to give the floor back to Mara to start our Q&A session. Thank you very much. Thank you very much, Tiago. Now we will have our Q&A session. Should you have a question, please click on Ask the Speaker through our webcast. We already have a number of questions here regarding developments. Real estate developments, there are questions regarding a challenging macro situation. If customers of high income are more selective, and if with this we expect a drop in the pace of sales and the speed of sales throughout the year, and how do we see the beginning of Q2? Just to understand the scenario. And the last question regarding Real Park. We mentioned we when will we launch this? And we already talked about the club. I will try to answer all at once. I believe that during the beginning of the year, well, January and February were weak in sales, but but there was high speed in March, and this is what resulted in steadiness in terms of sales when we compare 2022 to 2021. Currently, we haven't seen any changes in terms of trajectory, where the demand was coming from towards this sector. I believe that everybody that works with this real economy is paying attention to a level a higher level of interest rate, and this is something that can affect the speed of sales and all the businesses. And on our side, we are controlling this and mapping this, and we will manage the company's decisions at the light. If there is a change in the sales speed. Now, regarding the Real Parque project, our decision was to initiate the process with the club, which encompasses mainly the surfing swimming pool that will be the first surfing swimming pool in the city of Sao Paulo within a club with spa, pools, gyms, and tennis courts and beach tennis courts. This is this is related to the approval of the project, and this is associated to a SEPAC auction that are rights of construction in the city of São Paulo that will take place in brief. So this is what we're observing regarding this project. This is what the information that we have. Now, regarding development, what about land banks? If we are thinking about buying plots of land or if we believe that our land bank is sufficient and we are not uh, looking around, we like our land bank. It is significant. I just would like to highlight that the company's land bank that is 1.1 billion reais approximately currently allows us to see the development of the developer for an additional 15 and 20 years. For those that want to follow this up closely in our IR page, we have our spreadsheet with all the plots of lands that are part of this 1.1 billion reais and which are the projects that the company it has that are connected to these plots of lands. The way we see the transformation of this land bank in sales value, well, we calculate the price market and we believe that this is 42 billion reais. And if you want to do your math, and if you see what we've delivered in terms of gross margin and our operational margin or EBITDA margin in our financial statements, here you can see the size of the value that we have as a company to extract from this land bank. We will not stop looking for new plots of lands if they make sense in terms of location and also in purchase cost. I would also like to highlight for those that have been following very recently JHSF, the profile of plots that we buy are different from the plots that most of the developers buy. We buy bigger plots. We don't buy medium size and small plots. And as a business philosophy, the company doesn't like exchange projects. We want to buy the plot of land and build at a pace where we feel comfortable in order to value this plot of land. And and we also take into account the best market moments to build on these plots of land. Well, there are some questions here regarding our expansion plan and new projects, but focusing on capex. What is the evolution of funding? And in Catarina, what about our shop owners regarding our capex? Our capex is within our budget with uh, with the purchase in advance of some material, well, we guaranteed that our budget would be within the values that were approved. Now, within our funding, we have funding to build these projects. This is our own funding, our cash operating generation, together with funds that the company funded through share emissions. Well, with this, we can continue forward to build. And what we've received from our shop owners, because of their interest in participating in the shopping malls in Cidade Jardim, we still have a line of partners that we would like to incorporate to the shopping mall, but as the shopping mall doesn't have any vacancies right now, we cannot incorporate them. Now, in case of Catarina, we are already accommodating the shop owners of the expansions temporarily through kiosks, and and this has increased our revenue. And this has even strengthened our cash generation in order to deal with the expansion with the biggest and the best outlet shopping mall in the country. And with this expansion operation, we want to strengthen our leadership position. Now, airports. There is a question asking to elaborate on the business model of the airport. Specifically, another questions if the high price of the fuel affected the results of the airport. Okay, well, number one, the airport business model. Well, the executive aviation is different from commercial aviation. So we try to understand the behavior dynamic of the executive aviation passenger in order to provide an experience when they use the airport that would be more favorable than what they generally find when they have to use a commercial airport for their executive flights. So the entry and the exit of the passenger in the Catarina airport is quicker than when you see in a commercial airport. What is the airport business? In a nutshell, we keep airports when they're on ground. This can take place in hangars or also in different areas. It could be covered or uncovered, and the owners of these aircrafts pay to JHSF or to the airport a certain value that it would be like if they were leasing the space where their airplanes are parked. This is similar to the revenue of a store in a shopping mall. Now, these airplanes, when they land or when they leave the airport, they take off, they require services like passenger servants, no, the cleaning of these aircrafts. The sometimes you have to provide power or gases to these planes, and this generates a variable revenue regarding the customer's demand. An analogy, this is a pay-per-view. The customer asks to do a number of things. There's a table of prices, and then afterwards, this is collected from the customer when we issue the invoice. Now, regarding fuels, the operation is very similar to a gas station where the company buys fuel from the distributors and then resells this fuel to the owners of the airplanes. Now, in terms of the increase of fuel price, this hasn't changed our margins in terms of nominal margin when we compare it to other quarters, although the price of aviation kerosene represented more revenue, but this represented more cost because the price was higher last quarter. I stated something that I will repeat. We pay more attention to the nominal margin than to the percentage margin. In terms of percentage margin, this quarter it was lower, although we had a nominal margin equal to what we had last quarter. So, financial strategy. We have two questions regarding these points. One would be if we intend to monetize or to recycle our assets in 2022 and to elaborate on our dividend policies. Okay, in terms of dividend policy, the company within its bylaws anticipates to distribute 25% of the net profit generated during the exercise. And we have practiced as possible something a little bit more flexible than these 25%. I think that we always have to see the company's cash flow, our financial and our investment obligation, and a moral obligation and to our shareholders that are remunerated through dividends. We balance all of these matters and try to do the best possible. Now, regarding your other question, that is the monetization of assets. The company strategy is to monetize assets, but we cannot say during what year and during which quarter we will have an action of asset monetization. But this is part of the financial strategy. As we said, the invested capital recycling in fixed assets. Here would be the airport asset or our shopping mall assets. A question not only regarding the airport but other segments, if we intend to segment to expand to other areas outside of São Paulo. They want to. Well, currently we are highly concentrated when we talk about airports. Well, we want to continue the capacity of the airport. This is very beneficial for us because this generates more results per increased real in terms of turnover. So it gives us an operational leverage position, which is important in terms of shopping malls. We're also focused on carrying out projects in the state of São Paulo, which are two expansion projects that I mentioned, and three additional projects that are totally aligned in the regions where our special customers live or work. Now, speaking of expansion, we have a question. You talked about Rail Park and they want to know about new development launchings for the year. Yes, we are planning a number of launches. I don't want to say anything in advance, but yes, we are closely monitoring points that are connected to demand for different types of real estate where there is no type of offering in the market. This is a timely moment to carry out these launches. And the other questions were already answered. So thank you very much for your answers. If you weren't able to pose your question, you can send your questions to our RI site if you're not satisfied as well with our questions, with our answer. Thank you for your participation, and I hand it back to you, Thiago, for your final words. And thank you, Alan Mata. Thank you for spearheading this webcast. Alan, thank you very much for your interpretation. And a big hug to the sign language community. As I've done during the past quarter, I would like to thank our employees. We are happy with the results that were delivered during this quarter. We know how they dedicate themselves in order to turn GHSF a company that provides unique businesses to unique customers. It is excellent to hear from our customers that live our experience and live our products, and they say, and your tenderness is transforming their life, and everything that is presented is seen as seen with excellency. We're in the middle already of a quarter, and let's continue doing what we have been doing for so many years, and we will continue with the mindset that the customer is why we are here, because we work for them. Thank you very much for your participations, and see you in 3 months.